Fine. These are the things you have to be the tangible assets assertions. Existence, this is for the tangible assets, is it right? Existence, completeness, rights, accuracy, and presentation. Fine. Now, when you think about it, what you are doing here, we are talking of inventory. Okay. When you do the inventory count, assume exclusively. Okay, exclusively you are focusing only on inventory. You are an auditor, you are going to the client place. When you go to the client place, you are talking in terms, you are thinking in terms of how to do the inventory. Okay? Introduction to the inventory, accounting for inventory, what is the procedures you have to do, what is the physical count, this is very important. Is it? This is very important, physical count. Okay? And what is the cutoff? As cutoff means date, is it right? Cutoff means automatic date. And valuation is nothing but you can put it in accuracy, you can put it in the net realizable value. Is it what we are talking in the moment we say inventory? It is going to be what? It is going to be IS2. Okay? What are the two methods in IS2? What the first one is net realizable value. Is it net realizable value? The second one is lower the cost. Is it right? Now, then you will come when you are saying cost. Then you will come what? FIFO, LIFO will come after this. Is it right? FIFO, LIFO, simple average come after this. Is it? This is the methods of costing. Is it? This is method of inventory. That is the basic difference between the two. Okay, that is the basic difference between the two as such. Okay. Now, when we work on this area, we will very specific think you are auditing. You are doing audit for an inventory. Okay. Audit of the inventory is continuing inventory counting procedures in relation to year-end audit and continuous inventory system. Is it? What are the two things they are? They are talking about the perpetual inventory. Is it? Perpetual inventory. Perpetual is continuous. Okay. You have another one, periodic inventory. The problem is with respect to periodic inventory. The problem comes here is when you are talking in terms of continuous movement. Is that when you are going to the client place and you are finding that you cannot say that stop it for a while and I will do the inventory count and then you continue. That is not the point. When the inventory is continuously moving, is right, from back end to front end, what are the measures you have to take it in order to work out the inventory? Is it? We will cover this in examination. Most of the time they will focus on perpetual inventory. Is it? Next, cutoff is nothing but what? Whenever there is a inventory, is it right? Last 15 days, is it right? Last 15 days and the beginning 15 days. Very, very important. You have to audit on this. Is it? You have to make an audit on this aspect. What's happening in the last 15 days? And this is the cutoff. Cutoff is nothing but you have to be very, very stringent whenever you are talking in terms of what? Whenever you are talking about 31st December. Means you should not take it in the next year. Not. That's why we say what happens. We are very much concerned about what? We are very much concerned about opening balance and very much concerned about closing balance. You see the closing balance. Closing balance will never be given in the trial balance. Is it right? Closing balance will never be given in the trial balance. Closing balance is always given in where? It will be always be given in the adjustments. Okay. Now, what is auditor attendance at inventory counting? What you will do? Observe, inspect. Is it right? Observe. Your observations are there. You will inspect how the inventory count is going on. Direct confirmation of inventory held by third parties. If the inventory is at some other place, you have to get confirmation. We have discussed somewhere in one of the chapters earlier. What happens? We have to get return confirmation. Is it? These are the methods we have covered. Is it? Return confirmation is more valuable than oral confirmation. Is it right? Direct confirmation is more having the more weightage. Is it right? Internal confirmation and external confirmation. External confirmation will have high value. Internal communication will have less value. Oral communication will have less value. Written communication will be on more value. Is it? This is why we have studied at that point. Here we are doing the applications. We will do the valuation. Is it right? I told you valuation as per International Accounting Standard 2. Other evidence relating to inventory. Explain. Is it right? Any other evidence. Explain what is the audit objectives and what is the audit procedures. Fine. Very simple. Is it? See, focused. Whenever you are doing this, don't mix up these things. We have receivables, cash, so many are there. Is it right? We will do 7. Now, when you are doing the inventory, what are the precautions you have to take? Is it right? When you are talking about the inventory, they are the same thing. They have put it in the pictorial form. Okay. You are talking about the inventory counting procedures, year-end, perpetual inventory. You are talking about the cutoff. Is there any other evidence in terms of valuation? We are talking about the auditor's attendance, and most importantly, we have third-party confirmations. Is it? I don't want to repeat this slide. Is it? Same thing. Understand entity, assess the performance, restricted procedures, and full substantive procedures. Is it right? Now, this is the entire chapter is depend on this. Understand the point? The entire chapter is depend on this as such. Is it right? What it says, there is that existence. Is it right? I will send this on the WhatsApp. Okay? Existence should be there. The inventory has to be there. Is it right? What we have recorded. Is it right? What we have purchased and what we have sold. What is there in the statement of financial position and what physically exists. Is it right? What is the now this is occurrence, existence. Is it? The inventory has to exist. Is it right? Then only it makes the meaningful understanding. We are talking about the completeness. We are talking about what it says. Why inventory is that much critical. Inventory is involved in purchases. Inventory is involved in sales. Whatever you are purchasing, that inventory is going to be sold. Is it right? That is the reason, and both are very crucial, purchases and sales. Is it right? So that's all purchase and sales are recorded. Completeness. Okay. All inventory at the year end is included as a closing balance. Is it? That is the why it will take time for the inventory to get the right value. They will not give you in the trial balance because they need lot of adjustments, lot of information to be consolidated before a value of inventory is given, has to be given. That is the reason they put it in the adjustments. Accuracy and classification and valuation, you can put it in a very simple term. It is the mathematical accuracy. Is it right? Costs are accurately dependent in accordance with the standards. When we are talking about the valuation, just now I told you, it is lower the cost, net realizable value. Is it right? Net realizable. This is as per International Accounting Standard 2. Is it? What is the cutoff? All purchases and sales are recorded in the correct period. Okay. Whether it is in the current year, whether it is the previous year. That is the reason why we have very much concern about what? We are very much concerned about opening balances and closing balances. Yeah, definitely. Now you have very specific one. Is that till now you have said 50-50. Now you have to say 60 is 40. Is it right? That is the progression you have to get. Make it a point. That is the progression you all should get. It should be 55, 60. Is it right? The confidence level has to increase. In terms of presentation and disclosure, in terms of where we are talking, in terms of what? In terms of the financial statements, inventory is properly classified into the accounts. Is it right? Into the accounts in terms of whether it is going to be opening balance, it is going to be closing balance, it is going to be in purchases, it is going to be in sales. Is it right? These things means inventory will not be in one place. Inventory will be in all the places. Is it right? Inventory will be in sales. Inventory will be in cost of goods sold. Is it right? Inventory will be in the current assets. Is it right? Inventory will be in the current asset, that is the closing balance. Inventory will be all over the place. That is the reason we have to be very sure and clear that how we are going to have a presentation and disclosure as such. Fine. Now, what it says? What is it? What is the inventory? Now you have very clear way of understanding. Is it right? Very clear way of inventory should be valued at the lower the cost or net realizable value. Is it right? Is it? This is where the rule says. Is it right? This is NRV. In short, we can write it as NRV. Okay. You can write it as they will not. They will give. They will 100%. They will consider. Is it right? Cost. What is the cost? What is the cost of all purchases? And what is the cost in getting the inventory to the present location? When you are talking in terms of purchases, is it right? I don't know whether you have some idea. We have a carriage inverse. Is it right? You have a carriage inverse. Carriage inverse will be on purchases, whereas you have the carriage outwards. Is it right? Carriage outward. By name itself says it is related to sales. Is it right? It is related to sales. Means any other way. That's the reason people say that it is a free delivery. No, there is nothing like free delivery. Every activity will be added to the cost. Net realizable value, what is the estimated selling price on ordinary course of business? Is that when you are doing the things, what is the sale value? Is it right? Sale value, you have to deduct any expenses. Is it right? Any expenses related to sales. That is very important. Any doubt is there? Ask me. Is it right? I know where I am telling you the new concepts, where you have covered these concepts or you have not covered the concepts. Is it right? Very specific. Is there any expenses related to sales? So you want to sell something, then what will happen? You will give some promotion. You will give some ads. Is it right? Definitely that expenses has to be deducted. That is the reason we call it as a net realizable value. What is now the real story will start. Okay, the real things will start. Completeness, all the things will happen. Is existence will be there, obligations will be there, valuation will be there, allocation will be there, and presentation will be there. Is cutoff will be there. Fine. Okay. These are all the things that is all the substantive procedure. Now, based on yesterday's class, you have very clear-cut understanding. We need the one aspect. Is it? We don't need all, but for our understanding, we have to make it sure. What is the substantive procedure of completeness? Is it whether we have entered it in the financial statements, every other inventory that exists that belongs to the firm as such. Is it right? When you do the things with respect to completeness, what are the various procedures? Is it right? 1, 2, 3, and 4. The first one is trace test counts to the detail. See, first thing what you have to do is you have to start with counting. We have to start with mathematical total count. Is it right? Test count, sequence count. Okay. The first thing is we have to make sure that We should not, we have to go detail. We have to verify each and every voucher is attached to it or not. Is it right? That is the first one. Is that mathematical accuracy, sequence accuracy? Is every math totals are fine? Fine, that's good. Is it right? Anyway, this is the first point in substantive procedure. When inventory is held in the third party location, you physically inspect this inventory or review confirmation received from the third party. Assume what is the third party? You have here you have warehouses. Is it right? Most of the time the inventory will be at the warehouse. Is it right? When the inventory is at the warehouse, you have maybe sometimes you own the things. Nowadays what happens? They will give you the space. Is it right? They will give you the space. Now, whenever it has been held by the third warehouse, you have to understand whether it is you are owning the warehouse, or whether you are taking it on a contract basis. Is it right? Now, whichever it is there, we are not talking about owning or we are taking on. Whichever is there, warehouse is a third party. Is it right? Warehouse is a third. You have to what? See, you should not say that you are working at a head office and you are not supposed to going to the warehouse. No, physically you have to go to the warehouse. You have to see the inventory. You have to review the inventory, and you have to, most importantly, you have to match it what? You have to match it with general ledger. Physically inspection, that's very, very, very critical. That you have to inspect it physically. That what is the inventory at the third party. Fine. Next, compare. What you have to do? You have to compare the gross profit. This is the easiest one. Okay, this is the easiest one. What you are doing? Compare gross profit of the previous year on industry average. You are seeing that what is that? We will say that yes, it is the sales. It is sales minus cost of goods sold. You will get gross profit. Is it? You are comparing. Is that you are comparing with the firm? You are comparing with the industry. You are comparing with the previous year also. Assume your gross profit percentage is how much? Your gross profit percentage is that your gross profit percentage is how much? 25%. You will see industry average. Industry average is 24%. You see the previous average. Previous average is how much? 36%. Now, it is little bit understanding. But assume the firm is going to be how much? 25%. Industry will be how much? 14%. Assume. And previous year is how much? Previous year is going to be 17%. This type of differences should not exist. Okay? This type of differences should not exist. We are going to cover this in the analytical procedures. Is it? Means what we are doing? We will compare. Is it? What is the? See, as simple as that. Whenever we are talking about the industry, you have to compare what is the industry and what is the little bit smaller margin is acceptable, but drastical difference is going to be for a question mark. Complete the disclosure checklist. You have to make sure that you should have a checklist. Is that what are the tasks to be done to ensure that all the disclosures relevant to inventory has been made. You should have the checklist. What are the tasks to be done, and those tasks has to be completed before things will wind up. What is the substantive audit? What the existence? It is, once you are saying it is an existence, is it right? Existence have only one thing. Existence will have only physical inventory count. Observe, that's very physical inventory is more important. You should not rely and say that yes, it is going to, we are not having a physical inventory count. It is the part of the audit report. Is it right? It is part of the audit report, statutory audit report, that the auditors have done physical count, yes or no, with respect to inventory as such. It writes an obligation, as simple as that. If it belongs to you, it has to be there in the current assets. If it doesn't belongs to you, fine, forget about it. Is it right? That's the very simple. Whether that any inventory held by whom, held by the third parties, is not included in the inventory figure. By observing whether it has been appropriately segregated during the inventory count. Is that what happens? See the thing. This is what it says. Is that this is your location? Is it right? This is the location, prime location. Is it right? And this is what? This is the warehouse. Is it right? Warehouse. Now there should not be double count. Understand point? There should not be double count. What they are saying? They are saying that the inventory held for third party is not included. Is it? See, you have to mention what is the inventory. Is it right? What is the inventory in terms of the warehouse, and what is the inventory in terms of the prime location? Is it right? Those both has to be separately reflected, and ultimately what happens? You have to make a total. Otherwise, what will happen? There will be a chance of double counting. You have to segregate, isn't it? You have to segregate between what is at the prime location, what is there, how much is there at the warehouse. Now, what is the second point they are saying? They are saying that for any build and hold inventory, means what is build and hold? You have sold the inventory, but it is held by the entity until the customer requires it. You have sold it, is it right? You have sold the inventory as such. When you have sold the inventory, is it right? What will happen? Assume, very simple, how it will work. Is it, when you have sold it, they will say that it will be their delivery after 3 days. Is it a delivery after 3 days? When you have the delivery after 3 days, definitely what will happen? Till 3 days, the inventory will be with you. Okay? The inventory will be with you. Now, at that point of time, you have to separate it. That this inventory has been sold. It should not be taken into consideration. We use the word. Is it that we use a word called as we have to flag off? Is it? We have to flag off. Is it right? That's what it says. Where the inventory has been sold but it is being held until the customer requires it, identify such inventory and ensure that it is segregated during the inventory count and it is not included in the year-end figures. It has to be treated as a what? It has to be treated as sold. Is that? It has to be treated as sold. Very simple. Is that? Common sense questions. That's all. Is that? It's a basic common sense. That's what it says. Nothing. Scenario questions, you can score more marks. Is it right? Now, what it says, how it will be reflected. Confirm that any inventory held at the third party, is it at any inventory held at the third party in the year-end inventory figure by reviewing the inventory listing. That is where we are very much concerned, is that whenever you have the inventory question, if wherever it is there, you should make sure that the third party locations inventory, is that, should be excluded. Is that? It should not be included. It is included in the year-end inventory by whether it is included or whether it is not included. Is it? It has. You have to write this much. That's all. Nothing more, nothing less. Don't explore, don't add any examples. Okay. Review loan agreements or board meetings that the inventory has been pledged or assigned. See what happens usually, is it right? People will take working capital loans. Is it right? Companies will take what? Working capital loan. When they are taking the working capital loan, what you will do? They are talking about guarantee. Is it right? They give guarantee. What is the guarantee they will give? They give the guarantee of inventory. They will pledge. Pledge means is very simple. Yes, I'm take my asset, and against the asset you give me the you give me the financial resources asset. Is it? Now what it says, it talks about inquiry with the management. Any warranty obligations are there? Any warranty is there? Is it right? Definitely it makes sense. Is it right? When you are talking about the warranty, definitely you are saying that warranty will be for 7 years. Is it right? You are buying a phone. Is it right? They will give you a 1 year warranty. Is it right? 1 year warranty. And sometimes what will happen? Customers will buy some extended warranty. Is it?
Yes, sir.
These things which has to be taken into consideration. Definitely what happens, warranty is what happens, we are not going to charge from the first time. Okay, first time, don't say that it is free of cost. It is already included in the pricing of the product. Is it right? It is already included in the pricing of the product, but you have to make sure that whether any obligations are there or not. Okay, that's all. We are not supposed to do more than that. Is that what we are talking about in terms of valuation? Obtain,
Yes, sir.
is it obtain a inventory listing and agree to the totals. Is it right? Agree to the totals. That's what we say. We are talking about accuracy. Is it right? Cast means again you have to list down. Is it right? To ensure that there is a mathematical correctness. Cast is not, when the moment you are talking about the cast, what is there? Cast is nothing but totaling. Don't get confused. Cast is not, you should not say totaling. Cast the inventory listing to ensure that it is mathematically correct. Words of sample of inventories to supplier invoices to ensure it has been. Means what happened? You are talking about the sample of inventories. Is that sample? Definitely, whatever the inventory we are going to dispatch it, that has to be matched with what? Supplier's invoice. Is that has to be matched with suppliers. Where standard costing is used, methods of costing. Is it right? Test a sample of inventory that it has been correctly valued. Is that standard costing? Is it right? What is the standard costing? Yes, if we are talking in terms of this many units has been used for at this price, definitely in that case you have to make it a point that the inventory is ensured to be correctly valued. Most importantly, for our materials, agree the valuation of raw materials. Is that raw materials to be looked for what? Raw materials, I will write, raw materials should be matched with the invoices, and raw materials should be matched with the price list. Every other company will have a price list. Understand point? That is the price list. And inventory, if you are talking about the inventory is the major source of price list. Is it right? That is the reason. Means agree the valuation of raw materials to invoices and price. Means you have, what we have to do, we are talking in terms of invoice. Is it? I will write it. If invoice, you will say 2 quantity into 50 riyals. It comes to how much? 100. What you will do? You take this price. Is that this is the price? You take the price and you confirm with what? You will confirm with the price list. so that there is no undervaluation or there is no overvaluation. Confirm the appropriate basis of valuation. Now I told you, is that procedures are what? We are talking about the substantive procedures, is right? We are talking about the procedures where we are taking into consideration the net realizable value or lower the cost, is right? This is nothing but basis of valuation. Most of the students will get confused. The moment I will ask what is the inventory valuation method, as per financial accounting. As per financial accounting, it is inventory method is net realizable value or lower. As per management accounting and cost accounting, things will differ. We are not concerned about that at this stage. Is it? This is the valuation. Our valuation is nothing but you have to get the copy of inventory and agree to the totals. You have to do the totaling mathematically. You have to match some sample of invoices with the supplier invoices. Is it? You have to take into consideration standard costing method. Subsequently, you are talking about the valuation and what is the basis of valuation. What they say, see, when you are doing the things, is that for labor cost, agree cost to wage records. Why we are talking in terms of labor at this stage, is it right? Because when you take into consideration cost of goods sold, is it right? Is it? Is it? Cost of goods sold. Is it cost of goods sold is what? Opening inventory plus purchases minus closing inventory. Is it? You have this. Now in all three cases, inventory is involved. And it will have impact on what? It will have impact on what? It will have impact on the production. So you have to what? You have to review the standard cost. Is it right? Reconciliation, that's very important. Reconciliation of the labor hours to the summaries as such. Is it right? Now, that means you have to reconcile how much labor hours are there and how much it has been written, because those are the people who are directly in charge with the production as such. Make inquiries to the management if there are any slow moving goods, if any obsolete old expiry date, is it right? Or expiry, that should be written down as such. People are there, is it right? You have the packing date, you have the expiry date. People are there, they'll say that yes, expiry date is going to be 10/11/2022. Automatically after that, you want to get access to that, you will not get the access. Is it? This is what we are talking in terms of slow moving goods, obsolete goods, and the goods related to the how it has to be written down. It says that very specifically examine prices at which finished goods are being reflected. See what happens is that if you adjust a very short, is it right? You will have the cost sheet, is it right? When you have the cost sheet, you will have the direct material, you have the direct labor, and you have the overheads, is it right? The moment you will take into consideration, this is going to be prime cost. Then you will add what? Factory overheads, is it right? Factory overheads. Then you will say that yes, office overheads, is it? There is a procedure, is it right? Then we'll say that selling and distribution overheads, is it right? Selling and distribution overheads, is it right? Likewise, what you are doing, you will say that yes, after that you will say that you will add profit, is it right? You will add percentage of profit, and ultimately you will get what? You will get the selling price. Is it? What is major important thing is finished goods. Examine prices at which finished goods has been sold. That's see automatically what will happen. Your gross profit margin will get affected. Is it right? Gross profit divided by sales. Is it right? Times 100. What is the gross profit? Gross profit is nothing but, is it right? What is the gross profit? Sales. Sales minus cost of goods sold. Is a sales minus cost of goods. That's what it says. You have to make it sure that at what price any changes. What we'll do, we have done in the previous case. Is it right? We'll calculate gross profit of the firm. Is it right? Gross profit of the industry. Is it right? Gross profit of the previous year. Is it right? I will write it again. 1 minute. You will do this. That's very important, is right? When you are doing this, gross profit is that you have three divisions of the gross profit. Gross profit of the firm will be calculated. What is the gross profit margin that is there in the industry, and what is the gross profit margin in the previous year? Is there any misstatements are there? It will be reflected. Don't use the word error. Don't use the word mistakes. Use the word misstatements. Okay, financial misstatements. That is the way you will get the marks as such. Is right? Now that how we have to. If significant level of finished goods remain unsold for an unusual period of time, discuss the management need to have the means what will happen if there is no sales is there. Is it right? If there is no sales is there, definitely you have to, if there is any significant quantity, okay, we are not talking about the what quantity is not, we are taking there only a significant quantity, then you have to discuss with the management, because what happens the moment you are talking about the unsold, is it right? The moment you are saying it is unsold, why we are concerned about unsold? When you are talking in terms of unsold, definitely the expiry date will influence. Is it? Why you are saying? You are saying that yes, people are selling milk. Is it right? When they sell the milk, it is 5 days, 4 days. Okay. Now you have to make sure. Is that fourth day you have to remove it from the shelf? Is that right? And how, if anything unsold, is it right? How we are going to give treatment for that? Understand, right? That is very important. How we should not throw away the product as such. Is it? We are talking in terms of what? In terms of valuation. What we are doing? See the thing. When you are talking about the valuation, what they are mentioning, they are compare the gross profit to the previous year, or with the what we have to compare with the industry. Compare raw material inventory to the previous year. Always we have to make a comparison of the previous year, what happens and what's happening now. Is that compare this is very important. Inventory days, is it right? When you are talking about the inventory days, how much time, is it right? How much time inventory took, is it right? Inventory took to convert into cost of sales. Is it? That has to be taken into consideration. Compare the current year standard cost with the previous year. Okay, this is what we are talking about. We are talking about the valuation and allocation. Compare actual manufacturing cost with the budgeted values. Whether we have exceeded the budgets or we have within the budget. That is the reason. Is that we have to make sure that what is the budget and what is the actual, and we have to calculate the variance as such. This is with respect to valuation. Is it cutoff? Cutoff, you have very clear idea. It is the date. Is it right? You have now you see the things. We have GDNs. Is it right? It is nothing but goods delivery note. In the similar way, goods delivery note is applicable to where it will applicable to sales. Is it right? You have another one we call as GDN. Sorry, GRN. Is it? Goods received note. This is related to what? This is related to sales.
Purchase.
Sales. Is it? One. Got it. 1 minute. Thank you. This is related to purchase. Got what? Now we have to make sure. That's what it says. Cutoff is nothing but, see, this is very important. This is 31st December. Is it right? This is 31st December. We should make sure that, see, that is the reason if you take into consideration, they will say 31st December there is no movement of goods. Got it right? 31st December for time being there will be, because everyone is busy with taking the stock of inventory. Is it? Everyone will take the. Note the good numbers of the last GDN. Is it right? And GRN. Before the year end and the first GDN and GRN after the year end. And check whether it has been included in the current financial year. Yeah, you have to say yes. Now you can make it a point. GRN is how much? 31, 32, 33. Okay? Is that GRN? Now this is the last GRNs. Is that for goods received notes and goods delivery note? Is that we put in both the cases? Is it right? Now, is that numbers will be different? Okay. Here we are talking about only goods received note. Okay. Now, from 1st January onwards, is it right? We have to be very clear on the date. Okay. On 1st Jan, when we have received, is it right? On 1st January, what will happen? We have to make sure that it will be starting from 34, 35, 36, like that. If we are saying the date is 2nd of January, is it right? It should be in the next year. If they are going to say that it is related to 28th of December, it should be related in this year. Is it right? It should be related in this year. That is where we are talking in terms of a cutoff. In the correct financial year, we have to include it. Is it right? You have to note the numbers of the last GDNs and GRNs before the year end and after the year end. They are putting both the things very, very clearly. They say that it is before the year end and they say that it is after the year end. In the examination question, they will ask cutoff. Okay, we have to write. Accuracy is nothing but it is a casting. Is that it's a total, as simple as that. Is that obtain a copy of the inventory listing and cast it. Cast is nothing but total. Is it right? We are talking about what we have and test the mathematical extensions of the quantity, multiply the price. Is it right? Means we have to make sure that what we are talking about accuracy, we are talking in terms of accuracy in terms of units, time, price. Test count. Okay, we have see it can be done by a new person can do it. Is that in the audit team? Is that trace the test counts back to the listing, means you will whether the counts that has been done and the counts that has been returned or matching or not matching. If the entity has adjusted the general ledger to agree with the physical inventory, is it right? You have to, in the count amounts, agree to the both the amount. Means if there is any adjustments are there, is it right? I told you inventory will be always given in the adjustments. That is the reason we are showing it in the both the places. That we are showing in the profit and loss account, we are showing in the balance sheet as such. Is it right? Then you have to make sure that what is there in the income statement and what is there in the balance sheet. When a continuous perpetual inventory system is maintained, agree to the total of inventory listing. When there is the problem is with respect to perpetual inventory count. They will not say continuous, is it right? They say it is a perpetual. When we say it's a perpetual, it means what? It is continuous. Then for in that situation, we have to make sure that what are the precautions we are doing. Whenever there is a continuous inventory, whichever inventory is counted, whichever inventory is it right, is counted, is it right, is counted should be kept separately, is it right, should be kept separately and flagged off. Is it that is you have to why we are doing this? Because we should have an understanding that this inventory has been counted, this has been not counted. Is it right? This has been counted and this has been not counted. That's the very, very clear. Read the notes of statement of financial statements to ensure that the information is accurate and properly presented. Is that notes to the accounts? They will give in all the cases. Is that notes to the financial statement? It is the part of the financial statements. Is it right? People will what have, if there is any doubt, we can refer to the notes to the financial statements. It will give us a brief and very brief and short understanding about how the inventory has been treated. Is that when you are doing the classification, is that when you are classifying the things, where is what they are saying, how we are going to classify in raw materials, how we are going to classify in the work in progress, and how we have to classify in the finished goods as such. Is that when we are going to say the raw materials, work in progress, and finished goods. Is that you have done in contract costing? Is that you have done in contract what the in the where we have done that somewhere we have done in one of the lectures, in lecture 7 or 6 or 7 we have done this. Is it right? We have to mention what is the element of raw materials, what is the work in progress and the finished goods. Yeah, ready, read the notes. Is that that's what it says. See, people will always ignore this. Of course, see, professional level examination is different from the academic level. Is it right? In the professional examinations, you have to read to the notes to the accounts. Very important. In the academic program, we never ever think we have to tell, but we will never say we have to refer to notes to the. Notes to the account is nothing but a brief explanation. Is that? It talks about what? It talks about the brief explanation, which will give you a sufficient appropriate audit evidence. Is that? Which will give you a sufficient appropriate audit evidence. Is that? That's why we are talking about notes to the account. Now, what we say when you are doing a physical inventory count, is that this is what we are talking about, all substantive procedures. Okay. The second part is physical inventory. When we do physical inventory, what is the procedures we have to take into consideration? Is that physical inventory? 501 audit evidence, specific consideration for selected item. Inventory count provides evidence what in terms of what? In terms of existence and condition of the inventory. Fine. If inventory is material, yes, see what you are going to do when there is a physical inventory count. Is that right? The most important thing is you have to plan. Is that structurally, sequentially? It says that if material means you have a value of to worth it. Is that right? Is that now I am saying value to worth. Is it right? You cannot ignore it. Is it right? If inventory is material, follow the instructions given by the management. How the management instructions has been delivered, and those instructions you have to evaluate. Okay, evaluate management instructions. What are they? Whatever the physical count. Understand, point? This is entirely a separate segment of inventory. In the previous case, we are talking about the substantive procedures. I'm stressing here again and again. That's very important. When you are doing the physical count, you have to inspect. You have to observe. Is it right? First, take the instructions given by the management. Fine. Observe performance and of what? What is the count procedures? How the staff is doing. Understand point? How the staff is doing, you have to observe it. Is it right? How the staff is doing the count. How the staff is performing. Is it right? Is performing. You have to inspect. Is it right? You have physical count means you have to inspect. Literally, yes. 1, 2, 3, 4, 5. Then you have to see the register. In the register, you have 5 items. And the physically, you should have 5 items. Fine. Perform test counts. Is that in terms of what? Perform test counts in terms of what? Perform test counts in terms of columns, and perform test counts in terms of what? In terms of rows. The end value should match. Is it? This is the physical inventory count is very, very crucial. Is it right? What is the physical count, inventory counting? Physical count at the year end, physical count before or after the year end, and physical, it is nothing but the perpetual count. Is a perpetual, continuously moving. Is it at hypermarkets? Continuously it will move. Okay? That's very challenging. If you are doing the inventory count, it will be very challenging to do for what? To do hypermarkets, retail markets. Because always the retail markets are in the movement as such. Is that? Means you have the physical count at the year end, you have the physical count before the year starts, and after the year will end, and you have a continuous or perpetual inventory counting. The issue is with perpetual only. The issue is not with periodic inventory. Never ever we discuss periodic inventory. The issue is perpetual. What happens? Ensure that all inventories are calculated once in a year. Auditors need to verify that management this is the job of the management, is it right? That all inventory should be counted. Is a physical with the register. Is a physical with the register at least once in a year. What it says, the second point, maintains adequate inventory records that are kept up to date. All the records should be up to date. Is it right? All the records should be up to date. Over a period of time, now we are seeing this. Is it right? Now we are seeing this. If you go now, people are doing what? People are just last moment, they will update the records. No, it has to be done on an online and a real-time basis. Is it? Has satisfactory procedures for inventory counts and test of counting. See, whenever we are talking about the procedures, is it right? What is the procedure we will do for inventory counts? You have to take the instructions from the management. Is that first thing, first and foremost, when you are talking about the inventory count, you have to take the instructions from the management. Is it? That's the most important thing. Is it? Next, has satisfactory procedures for inventory counts and test counting as such. Investigate and correct all material differences as on that day. Is that immediately? Immediately, if there are any corrections are there, you have to make those corrections at that point of time. Is it right? At that point of time, we should not delay it. Is it? Because it is a continuous. It is continuous. Process is continuous. Is it right? Now, before the count, during the count, after the count. Three things are there. Is it right? Three different things are there. Before the count, what we have to do, or during the count, what are the steps, procedures we have to follow, and after the count, what is the procedure. Before the count, is it right? First, review prior year arrangements. You have to take the last year. Is it right? To get an idea. Is it? To get an idea. For your prior year engagements means review what happened last financial year. Nowadays, it happens here also. Is it right? People will get it registered, and subsequently things will means you have to make sure that prior year arrangements. You as a auditor, you have the right to discuss the arrangements made for the internal audit with the management. Discuss the arrangements made for the external audit with the management. Is that we are not concerned about the internal audit here. We are most concerned about what? External audit. Is it right? Now, when you assess the risk, what is happened? You have to assess the risk in general. Is it right? You have to assess the risk in general. You have to assess the risk in terms of materials items, and you also have to assess the risk with respect to what? Location. See, location risk will be done from various angles. Okay, don't say that risk is like a very structured, tailor-made. No, location wise, is it right? You have the warehouses somewhere on the shore. Is it right? What happens? People are very much concerned. If weather is not good, things will not go in their favor. Is there? What are the key factors where you are storing, where you are retrieving, where you are delivering, and where you are going to have the follow up. Okay, that are the key factors we have to take. Review inventory count instructions. See, for what we are doing first, we are saying that we have to take the instructions from the, we have to take the instructions from where? We have to take the instructions from the management. Is that once you are taking the instructions from the management, review inventory, how inventory has to be counted. Is that how the inventory has to be counted? Plan procedures. Is it definitely? Then you will say plan procedures for high risk value. Is it right? High risk value for low risk value. Plan procedures for what? Plan procedures for the inventory that has been held at the third party. Is it that has been held with what? With the third party. Now you see the thing. Third party is nothing but it has not the warehouse, as simple as that. Is a transit, goods in transit. Is that what it says? Means when you pay the amount, is it that when you pay the amount for the purchases, automatically that has to be shown separately in the warehouse, third party location, and when you have paid the amount, it has to be shown in the financial statement. That is the most critical part. How we have to, what and how we are going to count inventory at the third party places. If it is anything is there is a clause where you have to get what, where you have to get the return confirmation. Is that this is before? Is it right? Before the count. Is it during the count? Is it what happens? Observe. Is it right? See the thing. What you are using the thing. You have to first you have to observe, then you have to perform, then you have to ensure, and last we have to confirm. Subsequently, what will happen? You have to conclude whether the inventory has been properly carried out, whether there are need any amendments, any changes, and last they have to gain an overall impressions of the levels of values of inventory held. Is it? These are the, I think these are the 7 points. Is it? These are the what we have to do. The first thing, observe that the client staff are following the instructions. Then this will ensure that count is complete and accurate. First, we have to make sure that the client staff are following the instruction. That is the reason we will take instructions from the client also. Auditors will take external auditors. Perform test count to ensure procedural and internal controls are working. Is it? Perform test counts means what we are doing, we are counting on a sample basis. Is it right? To make sure that there is an existence. Is it right? There is an existence and there is a completeness. Third one, is it right? Now, here they have not mentioned, but if there is, maybe in the subsequent points they will do. You have to identify the absolute, is it right? Yes, you have to identify the absolute and slow moving inventory. Is it outdated inventory? Is it right? Outdated inventory. Definitely what will happen? Slow moving inventory. Because when we are talking about the inventory, the amount which we are going to spend on inventory is almost 90% of the income statement. 90%. The moment you are talking about the purchases, you have to convert it into sales. At that place only you have to do reconciliation. Getting my point? That is what it says. Reconciliation is somewhere it is going to be reflected. Confirm that inventory held on behalf of third parties separately identified and accounted in the financial statements. Is it right? In the financial statements, when you are talking in terms of IES 2, you are talking in terms of inventory, you have to say that in these third party locations, these are so many inventories are there. So that inventory is not, either it should not be overestimated nor it should be underestimated. If you count twice, it will be overestimated. If you are not counting it, it will be underestimated. Conclude that the count has been properly carried out and sufficient reliable as a basis of existence. Consider whether the amendments is necessary for subsequent. What means what you are doing? You have followed the instructions. Is it right? We have followed instructions. When we have followed instructions, in future, is it right? In future, any amendments is needed. Is that? That's what we are talking in terms of. This is the point number 5. This is the point number 5. This is point number 6. And what is the fine? Any gain and overall impression levels, that values of inventory held, so that the auditing may in due course we have to judge whether inventory appearing in the financial statements are reasonable. Get me point? Means you cannot say that, why it is reasonable, keep it in mind. You are talking in terms of non-current assets. Is it right? You are taking into consideration non-current assets, property, plant and equipment. You are taking the current assets. In the current assets you will do what? You will take inventory. Is it right? Inventory is, now I will tell, it will be in terms of what? It will be in terms of raw materials. It will be in terms of what? It will be in terms of finished goods, and it will be in, it will be in terms of work in progress, and it will be in terms of finished goods. Is that this is means when you are having an overall impression, you should make sure that how much is in raw materials, how much is in work in progress, and how much is there in the finished goods. That is why if you add all these amounts, is it right? If you put these amounts into consideration, then only what will happen? We are going to make sure that this is the closing balance of inventory. Again, I will repeat what we have to do during the count. Okay? Observe whether the client is following instructions or not. Is it right? Second one, ensure procedures and internal controls are working properly or not. Third one, ensure that the procedures have identified the damage and slow moving goods. Fourth one, we are talking about if the inventory is held at the third party, it has to be taken into consideration. Fifth one, we are talking in terms of the existence. Is it right? Whether the inventory is existed. Maybe there will be movements. Is it right? Even there are movements, whether it is existed or not. What is the sixth point? Any changes has been happening, amendments to the rule, it has to be clearly reflected. And last but not the least, we are talking in terms of what? In terms of its valuation. Means in terms of its presentation. Is that in terms of its valuation, in terms of presentation, how it has been presented in the financial statement. Where is Maita? Saturday 4 to 6 I will take section B, again question papers. Okay, again question papers will be there. Okay, we will follow the question paper. Somewhere we'll take another recent paper. We will try to take one recent paper. Is it right? So that it will have a clear cut idea about how we have to work it on. Now, once you have done that inventory count, okay, after the count, now what happened? You have to keep those documents very, very, very securely. Is it right? That is very crucial. After the count, trace the items that were test counted with respect to what? Final inventory sheets. Fine. Whatever the counts are there and wherever we have entered, those has to be traced item. Observe whether all count records have been included. Is it? Observe all clients' records has been included in the final inventory sheets. Means all records, means all sheets are included. All records is nothing but whatever we are talking in terms of the rows, columns, everything has to be filled up. Inspect final inventory sheets to ensure that they are supported the count records. Is it? Now, if you are going to make sure that what is after count sheets are important. You remember after counts what? Sheets are very important. Is that we have to make sure that we have to ensure that the sheets should not be misplaced. Okay. Ensure that continuous inventory records have been adjusted. Is it anything that is happening, any movements has been taken place? You should not miss any stock. You have to be very precisely count all the stock which are static and which are in moving in nature. Is it right? And we have to make sure that, is it right? Ensure that point number 4, okay? I will put easy 1, 2, 3 and 4. Continuous inventory records have been adjusted with the physical counts. Is it right? And that differences has been, if there is any differences, you have to identify. Point number 5, what is it? Confirm cutoff. What they are saying, what is the last serial number and of the goods inwards and what is the last serial number of the goods outwards. Is that what we have done? GRN and GDN. Is that here what we have to take? What is the last number? Is it right? Last number of the year and the first number of the next year. They should not have any gap. Okay? They should not have any gap. In the goods delivery note also, there should be last number and the first number. Is that review replies from the third parties about it. If you are getting what? Replies is nothing but return representations. Is it right? I will write here. Is it right? I will write here. Return representations. I will keep there also, okay? I will write there also. Confirm that the client final evaluation of the inventory has been calculated correctly. That's what we have to make confirmation. You have to give in writing and follow up queries and notify problems to the manager. Means what is after count? After count are the most important thing are the documents. You know, the most important thing is what? The documents. You have to retain. We have to retain those documents, and subsequently we have to make sure that whatever we have done before the count, during the count, should be secured well enough. If there are any issues, those has to be discussed with the management. If inventory is held by the third parties, is that, see how much they are giving the importance to this element, is it right? If inventory is held by the third party, you have to get what? You have to get the direct confirmation. If inventory is held at the third party, inspection or appropriate audit procedures should be followed. Is that? It means we cannot just rely on the oral communication about the inventory at the third parties. Inventory is at your place, fine. I'm not saying that is not important. That's fine. But the most important thing is inventory that has been located at the other locations. What they say whenever they are talking about the inventory, they will make it see, as simple. They are very see here. They are very straightforward. Okay, very straightforward. They say that attending, you have to attend. There is no option. Arranging for an auditor to attend the third party inventory count. Obtain an auditor's report whether at the third party whether internal controls are there or not. Effective controls are there or not, to ensure that inventory is properly counted and safeguarded. Inspect documents in respect of what? In respect of third party. Because why they are giving such importance is, most of the cases in 99, that's why I said, now what is the concept? Now the concept is warehouse. Is it right? Now the concept is warehouse. You have the warehouse, you have to take the Danube, is it right? Take the Danube, take the center point, is it right? Where they have warehouses, they have warehouses in somewhere in Barca. Is it? What happens? Definitely at the end of the year, the auditors have to go to the warehouse, they have to check, they have to get the confirmation, and then only it can be presented in the financial statements. Requesting confirmation from other parties when inventory is pledged or collateral. Pledged means what? You have the inventory of how much? You have the inventory of 100,000 reals. You will 100,000 reals. How I will put? Yes, 100,000 reals. Is that? You will pledge it and you will take loan against that inventory. Is that? Again means you are what you are doing? You are liquidating. Is that? You are not selling off. Is that? You are not selling off the inventory, but you are converting that inventory as of now into cash. Is that? Requesting confirmation from other parties when inventory has been pledged as collateral. Pledge means what? We have taken some financial assistance on that inventory, if any, that has to be reflected. What they say, now you see the thing, talking about the perpetual inventory, there should ideally be no movement during the inventory count. Yeah, when there is a cutoff, is it right? When you are talking about the last 15 days and the first 15 days are not that much important, but the only thing is last 4 or 5 days of the year, is it right? They say that receipts and dispatches should be suspended, kept on hold. don't write suspended. It should be kept on hold. Don't use negative words, okay? Try to avoid negative words. Be very, very specific with positive words. Things will work, okay? If it is not possible to sustain all deliveries, this inventory should be kept separately from other inventory. Is it? It's not possible that, yes, continuous inventory. Is it? If it's not possible that if it is not possible to suspend all deliveries, then it has to be kept separately from other inventory and carefully down. Means that's what it says. What we are doing, we are putting flagged off. We are flagging that inventory, that this inventory is counted or this inventory is not counted. Is it right? That has to be, we can identify. Is that? That's what it says. You are talking about the before, you are talking in terms of order. What we are doing, we are very much concerned about what? Purchases. Is it? We have before GRN, it has been included in. Is it? If it has been included in, we will make it a point, and after GRN, how it is going to be worked it out. Is that? We'll say whether goods received note, is it? Whether the goods received, this is the cutoff date. Is it right? This is the cutoff date. Is it? Before it has been included or it has been included after the year. Is it right? That has to be, understand upon, it has been included before the cutoff date or it has been included after the cutoff date. In the similar way, we are talking in terms of year-end sales. Is that goods delivery note? When goods delivery note is that, what will see the thing? This is the issue as such. You have the invoice date. Is it right? You have the invoice date. Invoice date will be different from the delivery date, and invoice date will be different from the received date. Now, once you have invoiced and collected cash, these type of inventory should be flagged off. Is it? Should be flagged off. See, this is the point. Otherwise, why we are concerned about this is either it will be overstated or it will be understated. Is it? Either it will be overstated or it will be understated. Fine. That is the concept of a cutoff in terms of purchases, in terms of sales. How we are going to value? We are not going to make it that much. Is that it should be at a lower cost or net realizable value. Auditors need to understand how cost is measured. Is it? Cost is determined. Cost should include appropriate. What will happen? They also take into consideration any overheads. Means that's what it says. Is that we are talking? We are making a sure assume we are talking in terms of what? In terms of purchases. I told you in the beginning. Is that what we will add? We add carriage inwards. And there are many ways to determine cost. Is that if you take into consideration, now you will say, I think it will be there in the next slide. Is it right? We are talking about what? We are talking about FIFO, LIFO. Is it right? We are talking valuation. When you are talking about the value, see the thing. This is the difference. Is it right? When you are talking in terms of valuation, valuation is nothing but lower the cost. Is it right? Valuation is nothing but lower lower the cost or net realizable value. Whereas when you are talking in terms of cost measurement, determination of the cost, is that determination of the cost, how the cost is calculated, then we will say it is based on FIFO, it is based on LIFO, it is based on simple average. So basically we are not concerned about that. We are concerned about what? We are concerned about this only. Is it right? Valuation of raw materials. Definitely valuation is based on what? Valuation will be based on the supplier's invoice. Based on the invoice, is it? If standard cost is nothing but what is the cost that has been reflected. As simple as that. Check the basis of standards. Compare what is the actual cost and what is the variance, if any. Fine. In this process, when you are doing the things, when we are coming to the second stage, it is in work in progress and finished goods. What we'll use? We use something called as analytical procedures or reasonable checks. Analytical procedures is nothing but we will compare percentage of completion. Is that we'll compare what happens in the current year and what happens in the previous year. Analytical procedures will compare percentage of gross profit. We'll compare with the firm, we compare with the industry, is it right? We'll compare with the prior year. Is it? See, our purpose is only to remember this. We are not supporting any points with examples. Understand point? With never. Why we are discussing examples? To understand the concept. In examination, we have to be very dry. As simple as that. We have to be very dry to the point. Is it? What is the cost versus net realizable value? We are not doing that much. Is it right? This will not be there. Is that very clearly? Just for our explanation, it is there. An increase in cost or fall in. What is the net realizable? When cost versus net realizable. Net realizable is less than cost, means an increase in cost or a falling in the sale. What happens when you are talking about the net realizable value? Is nothing but either the cost is increasing or selling price is decreasing. You have, what are the reasons? You have a physical deterioration, we have obsolescence of the products, is it right? Obsolescence of the, means net realizable value will be less than cost. Is that? Net realizable value will be less than cost. Definitely what will happen? There will be a loss. Is it right? There will be a loss. Obsolescence of the products, outdated projects, net realizable value will be less. A marketing decision to manufacture and sell product at loss, net realizable value will be less. Is that? Errors in production or purchasing, the net cost will be more, realizable value will be less. When realizable value will be less, definitely it will lead to what? It will lead to losses. What they say? Questions on inventory likely to come up in the scenario based with respect to the audit procedures. Inventory is tested by the examiner several times. Is that right? Several times. Both in the old and new. Requirement tend to focus on particular statements and substantive audit procedures. They have commented from time to time that candidates do not provide enough detail in the audit procedures. Is that? People will provide general information. Is it right? See the things. Here also they have mentioned For example, discuss with the management or check for existence is too vague. Is that when you suggest audit procedures, it should be vital that they are sufficiently detailed. Otherwise, you will not score full marks. Is it right? You have to make sure that the difference between a substantive procedures, and test of controls. See the thing. There are many. See now by the time, next few lectures, is it 10, 11 and 12, they will give you only the things how you have to approach the examination. Is it right? You should not use check, you should not use ensure. You have to say discuss, you have to say observe, you have to say recalculate. This is the same thing we have done in the not current assets. Is it right? This is the same thing we have done there. Is it right? We are talking in terms of questions on audit risk and responses may require the knowledge you have gained from this chapter. Fine. Now, I didn't see your message, Fatima. Okay? It happens. Fine? I have to switch from one screen to another screen. Okay? Is it right?
It's okay.
Fine? It happens. Okay? We will have small break. Okay? Very few. Small. Just I will have a glass of water with me. Then we will do one question. Okay? A small question we will do. Okay? Is it okay with you? Yes or no? Only with respect to inventory. Okay? Good. This is March, June 2019 answer. Is it? We have little bit time, 15 minutes. Okay, we'll do this. Fine. What they are asking? Can we start now, please?
Yes, please.
Nobody is there? Fine. Okay. A small one. Okay. Yes. I got it. Is it? Yeah, I got it. Fine. Thank you. Fine. Now we will do a small one. Okay. Very small one. Okay. See, they will give you a question like this for 30 marks. Okay. Here it has been given for how much? A, B, C, D, 10 and 14 plus they will provide. Okay. What they are asking us? They are asking us, see, here you put the date. Okay. Here you put the date. How much? This is 9. This is 9th of 11 2022. Okay. Is it? What they are asking is, they are asking us as the substantive procedures to perform, to obtain sufficient audit evidence in relation to valuation of Hyacinth's inventory. They are talking about, see, they are talking about development expenditure, is it right? They are talking about the tax liability. We will do this, is it right? In the next case, we are going to work it out. How much is they have put it, how many marks? 6 marks. Is it right? 6 marks, 6 procedures, okay? 6 marks, 6 procedures. Now, what they have mentioned, we have to take this into consideration, okay? Hyacinth develops and manufactures computer environment components and its year end 31st December. The company has a large factory, 2 warehouses, one of which is off-site. Is it right? Other location, third-party location. Understand? But the moment they say off-site means it is a third party. Now you understand what is the, in what context we have discussed. You are an audit supervisor of Tulip and final audit is due to commence shortly. Draft financial statements show total assets are how much? 23.2 and profit before tax is how much? 16.4. The following matter. We are only doing this one, okay? We are only doing this one. Is it 9, 11, 20, 22? Is it? Your firm attended inventory count for Hyacinth's company and confirmed that the controls and processes for recording work in progress and finished goods were acceptable. Work in progress and finished goods are both material to the financial statement. Naturally, material means it is in terms of value, and the audit team was able to confirm that both the quantity and stage of completion of work in progress. Before goods are dispatched, they are inspected by the company's quality control department. Fine. Just prior to inventory count, it was noted that a batch of product line cokers which has been produced to meet customer specific technical requirements did not meet the quality and technical standards. This inventory has in production of the, now what happens? Performance materiality. Is it right? Performance. We have to know how much, what is the value of inventory? 450,000. Upon discussions with the production supervisor, the finance director believes that the inventory can still be sold to other customers, alternative customers for how much? 90,000. Is it right? See what they have mentioned. They have mentioned total assets. Is it right? They have mentioned what? Total assets. These are, see, this is now you can understand 23.2 million. Profit before tax. Is it right? 6.4 million. This is as recently 2019. Okay. This is, and you take 2019 or you take 2009. Nothing, no difference is there. Is it right? No difference will be there. Don't worry that there will be difference. Is it right? It never be on that. Is it right? Okay. Next. What profit before tax? What happens? They say that cost of production is how much? Cost is how much? Cost of production is 450,000, and if it has been somewhat did not meet the standards, and they are selling it for how much? They are selling it for 90,000. Fine. Now, what we have to do? They have mentioned that we have to what is the substantive procedures? Is it right? Now, when you are talking about the substantive procedure, very specific. Is it right? When you do the things, is it right? Now, Yes. When you are going to review this, just increase the font size. Okay. What it says, where we are talking in terms of inventory. Is it right? 1 minute. Just I want to make sure that. Is it right? They are focusing on what? They are focusing on work in progress. Is it right? They are focusing on what? Where you attended the inventory count, confirm that the controls and process for work in progress, recording work in progress and finished goods were acceptable. Work in progress and finished goods are both are material. Means they are what they are doing in this process. They are talking only about two things. One is work in progress. One is where they are very much focused on finished goods. Is it right? Now, fine. Which has been dispatched for the customer's requirement. Is it right? Now, based on work in progress and the finished goods only, we have to do what they say. They both they have done. They said that they have the they are recording it. Fine. Again, we have to ensure that we have to make sure that the recording is as per the requirements. They said that the quality is the most materials. They are talking about the confirmed about the quantity and stage of completion. Again, we have to calculate. Is it right? Recalculate, reperform, observe, inspect. Is it right? These are the things again we have to mention. We have to mention with respect to what? We have to mention with respect to the exclusively with respect to the work in progress and finished good. What with that they say? They say that they say that. Is it? You have to obtain the breakdown of work in progress. Okay? You have to say that how much is the work in progress for each product. Obtain the breakdown. Is it right? And for the sample of work in progress during the inventory count, to the what we are doing, we are verifying with what we are matching with work in progress schedule. Is it that what happens? See what happens? Raw materials, work in progress, and finished goods. Is it right? And finished goods. See what is the thing? It is all depends on percentage of completion. If this much percentage of completion is done, then we have to identify it as a work in progress. If this is done, we have to identify as a finished goods. Is that what they say? Obtain a breakdown of the work in progress. Compare with the during the inventory count. What is the work in progress schedule? And you have to agree what? Agree to the percentage of completion. Second point is that we have to take 6 points we have to take. Keep it in mind. Okay. Sample of inventory items in terms of finished goods. Obtain the relevant cost sheets. Is that because what happens? Finished goods and work in progress is basically the cost is happen. Is it right? Once you are taking the cost sheet, you have to agree what? We have to agree with the raw material cost. Is it right? You have to agree with the what is the raw materials, what is the labor cost, and what are the overheads. Is it? What is the raw material? Means what happens? See the thing. Is that percentage of completion? Is it? When we say the percentage of completion, we have to make sure that how much is the raw material cost, how much is the labor cost, and how much is the overheads. Is it right? Third one, what they say? They said that what is the examined post year end credit notes. Credit. What is meant by credit notes? Credit notes is nothing but we have not paid. Is it right? We have not paid with respect to the cost, with respect to the returns, with respect to the anything we have written down. Is it an absolute inventory? Whether something we have returned, is it? We'll give credit note that yes, this much amount is credited in your account. In the next transactions, you can reconcile that amount for the readjust the amount to the payments as such. Is it right? What is happening is you have to make sure that you have to examine any post year end credit notes is there, whether in terms of what there have been returns which signifies that there is something which has to be adjusted. Fine. Now, what is the fourth item? We are very much focused on only two things. One, we are talking in terms of finished goods. One, we are talking in terms of work in progress. Okay. For a sample of finished goods, compare cost with the post year end sales. Get your point? Yes, that's what it says. Is that finished goods what? Finished goods will be the cost. You are talking in terms of sales. Is it nothing but sales minus cost of goods sold? Is it right? Then will come across if NRV whether the net realizable value is above cost or it is below cost. Means when you compare this, definitely we will come to know that it is a profit or it is a loss. Because why we are saying NRV? NRV we are saying that because we are using which one? In valuation. Is it? We are using IES 2 and we are using what? We are using the valuation. Discuss the basis of work in progress valuation with whom? With the management. Select a sample of items which has been included in work in progress at the year end. Is it right? At the year end. And whether the final unit cost price by verifying what? In terms of percentage of completion. We should know, is it? If work in progress is 40% completion, for each stage of completion, is it? For each stage of completion, there will be some cost element. Definitely you are comparing, is it right? You are comparing how much is the inputs and how much is the cost, how much is the inputs and how much is the cost. Definitely the inputs and the cost, there should be a minimum variation. Is it? There should be a minimum variation. Is it? Now what's happening when we are talking about the work in progress? How the work in progress is calculated? Working in progress is calculated based on the percentage of completion of the work. Finished goods, total cost. Is it? Finished goods, total cost. That is the basic difference which we are going to identify. 1 minute. Is it? Now what we have done, we have done the same concept, is right, in the previous case. What we have done, we have to identify what is the slow moving goods, is it? We have review aged inventory reports to identify is there any slow moving goods. Discuss with the management why it has not been written down, is it right? If slow moving goods are there, definitely it will be what? It will be with respect to the expiry dates, is that you have to write off, is it right? You have to write off. Then you have to ask with the management what is the criteria, what is the policy of writing off, is it right? For any defective items, is it right? For any defective items, we cannot throw it off the defective items, is it right? Work in progress or finished goods. Definitely there will be some, they are talking in terms of quality and quality factors also, is it right? If there is any defective items, we have to review what? It is the board meetings and how they have to sell it off. Definitely they have arrived at what figure? They said that the value is 450,000. They are going to sell it at 90,000. What is the basis of arriving at 90,000. In other terms, on what assumptions? On what assumption? If any products has been sold post year, then means after the year end. Is it at cutoff? Is it after the year end cutoff? Review the sales invoice with respect to NRV. They said that 450,000. I agree that 450,000 value of the product is not as per the required. There some defects are there. Is it right? So we have to make sure that what are the supporting documentation. Is it? We have to how you have arrived. What is the raw materials? What is the labor cost? And what is the overheads? Is it right? Confirm if the final adjustment of damaged product is this much. How much they are getting? They are getting a loss of how much? They are getting a loss of 360,000. And we have to discuss with the management if they have made any adjustments. If they have made any adjustments, we have to follow through. Is it? We have to follow through. Means very simple, work in progress, percentage of completion, finished goods, total cost. First segment. Okay. Next one, we are talking about the 90,000. What is the basis of 90,000? What is the basis of 450,000? Whether you are talking in terms of selling the scrap, is it selling the product at a lesser value, whether we have the approval with the management or not. If you are saying that yes, we got 360,000 loss, whether you have made the adjustments in the financial statements or not, we have to follow through and we have to confirm it. Is it? Means this is the basic. The more we do the questions, we will have ideas about how to deal with different situations.